Hey, good morning, guys. This is Roger with Hey, good morning, guys. This is Roger back again with Old School Futures. I appreciate you tuning in to my video this morning. I wanted to let me get this out of the way. I wanted to kind of show you what I've done to help me. I found some other um, little tools to help figure out where the market's going and things. So wanted to show you. I actually took my background here of the current chart that I'm working on and took the grid lines out, and it just made everything so much cleaner. You can see all I have on here is a daily VWAP here, a weekly VWAP here, and a monthly VWAP down here. And I've got them in these specific yellow, solid yellow, striped yellow, and then the monthly in purple. I've got them that way, so I always know what's going on. I always keep my colors consistent. I have found this little treasure here called Sethmo Large Delta Bubbles. That's the name of the indicator, and it's helping me. I've used it for a few days here, and kind of wanted to show you what it does, what it's about. It's instead of having a delta, um, instead of having a separate delta indicator on the bottom of the chart, what this does is puts it on the actual bars here. So if I take, if I take these, hide this for a second. Um, Let me take a second to go off of there, but there we go. If I hide it, then I'm only dealing with bars, with an entry, a high, a low, and an exit. And I'm looking at a 30-minute chart here because I want to get an idea. The market has just opened, but I've just recently signed on, and I want to get an idea of where we're going, where we came from, where we're likely to go before I even think about entering the market on a shorter time frame. So, yeah, you can see when we add that back here, this is exactly at what price level these larger delta buy and sell deltas come in, and where they come in and at what price level. So as you can see on the ledge here, we had a lot of buyers trying to move the price up. They were unsuccessful. Price moved back down. You get down here, you've got some sellers. Of course, you got some buyers here that drove it back up. Would be, as we discussed in previous videos, here's our normal distribution for the day. And 68% of our data would probably be, somewhere between this ledge and this ledge. Maybe this one. This one seems to be the one where they're sitting. And you can see that. You can see that when they got here twice now, maybe more than that. If you pull up over here, they've tried to drive price down, and buyers wouldn't have it, and they came in and drove the price up. As you remember, delta is the difference between buying and selling volume, and when you got more buying than selling, you're more likely going to go up, and when you got more selling than buying, you're more likely going to go in the selling direction. Now, it's not always the case. You can have absorption, and we'll talk a little bit about absorption here. What happens is when we get to the top of this distribution, where people that have gotten short up here are sitting with their orders in the past, from being over here and going short. They're going to protect this position. They're not going to let this position go and take them out of the market and take their money. So You're going to see who's stronger, who's moving the market, who can overcome who. It's a continuous battle. That's what it is. That's why it's so fun and exciting to do this. You want to. The market will tell you a story. The market will definitely tell you a story if you look at it and if you understand what's going on. So sellers are sitting up here, and as buyers try to push the price higher, sellers are going to absorb those contracts. So the opposite of buying, there has to be someone on the other side to take the trade. So sellers are absorbing, not letting the price go higher. The only time price moves is when there's no one sitting in that position to take that order, and price has to go to the next level. No one there, it goes to the next level. No one there, it goes to the next level. And I'll probably do a little video on absorption. I mean, not absorption, on market theory, and show you guys what I'm talking about there. But it's almost a little bit easier to explain and put it in context when we look at the actual market working and what's going on with the market. So right now we can see our average, our VWAP, our volume weighted average price that was down here at around 68.60 is now moved up to 68.90, meaning that the more than likely in the past little while here, buyers are in control. You can go back, see, buyers moved it up. Sellers tried to move it back down. Buyers said no. Buyers stepped in, moved it up. Sellers tried to take it back down. Buyers stepped in again. So who's in control here? There's your story. There's your story. And you can see the big players are playing off weekly VWAP. We drove down to weekly VWAP. This is a very good price for buyers to get back in, drive the market up, and make money. So this is exactly what's happened here. You can see this very well with this Sethmo indicator, this Sethmo large Delta Bubble indicator. I like it. Instead of using a different cumulative delta indicator on the bottom of the chart as a separate indicator, this one puts it right where it happened. And I love that. It just makes it so much clearer, so much easier to explain to you. It gives you a good picture. You can see the reactions off VWAP, and you can see reactions off of this ledge to push back down. You can see reactions off of this ledge to push back up. The most recent battle now is going on right here. It's going on right here. And what is that? That is the value area of this complete and total distribution here. This is a very nice distribution. It's what we call a standard distribution, or an ordinary distribution. So our point of control is right here. So in order for sellers to jump into the market, they don't want to pay too much more than right here. And you can see you got a pocket of sellers here, pocket of sellers here, try to push the price down. They were somewhat successful, but then buyers step back in here, and buyers step back in over here to push the price higher. So you can see, you can get these market you can evaluate the market. You can get this interaction and what's going on and who's in control of the market a lot better by looking at this 30-minute time period and taking this into consideration. So it's just another tool to use. Who's to say, that you get over here and you see that buyers would not let this come down. You get over here and you try to put in a buy right here, that sellers would not step in, get aggressive, and push it back down. That could always happen. And that's why you That's why when it does happen, that's why you get out quick. So you want to have you want to have an edge. You want to see what's most likely to happen, and so we see now that most likely buyers are in control right now. We're in a pretty good consolidation. This was overnight session here from 3 a.m., which is right here, to 8 a.m. Right here, you've got the London market. London moved it up, down, back up. Just kind of in a consolidation that's creating a lot of liquidity over here, a lot of liquidity down here. So now New York is opening, and then um, that's where your real movements will take place. So if there's a lot of liquidity sitting here, which more than likely there is, all these buyers that drove this market up, where do you think their stop losses are? They're down here. So their stop losses are sell orders. So if it goes against them and comes down here, they're going to sell. And if you got enough of those, it can give you some momentum to start down. And then sellers jump in and join the party. And then that even increases the likelihood of it going down. And that's what makes the moves. It buys it all up going down, going short, and everything available. And there's nothing else. So the market has to move to the next level to find some liquidity. It's all about liquidity. It's all about buying and the shorts and buying the longs. That's what moves the market. If they're available, the market's not going to move. If they're not available, the market will move. The market's got to find a price where business will take place, contracts will sell, and that's what it'll do. Nice little level here, round number 6,900. Look, we went right to it, and then it came down off of it. These are very important levels. These even number levels, 100 levels, like 800, 900, 7,000. Those levels where the big players are more than likely sitting. And you can see right here, we got some sellers sitting here. If we didn't, these buyers would have just pushed the market on up higher and higher and higher and higher. It didn't happen. So we know we've got absorption at the top of this distribution. We've got some sellers sitting there. And then we can also see them. There's sellers here. And the green, a little hard to see, but we got buyers sitting here. Now, these are what was on our DOM here. These are passive orders sitting there. And these green bubbles are transactions that have happened. These are waiting to happen. Aggressive transactions are here. They're time and sales, and these are happening. These are going through. So we take all the information we can, and we make decisions based on what the market's doing. Right now, we're just we're trying to see what's going to happen at this little ledge right here. So there's probably a lot of good liquidity right here. We never came and got any of this liquidity here where people joined in with these runs here and put stops down here. So it could come down here and clear all of these stop orders out that are sitting down here and here. If I were to go in with a buy here, I'm going to go back to my time in sales and watch what happens as we're approaching this level here. This is a good level to be at and see what happens. So let's mark it. And now we got sellers coming in strong here. There they are on the time and sales. We got buyers sitting right there. Buyers. They're not doing anything. You see how it never lit up like green. Now they're trying to make an effort to go up, effort to go down. You want to see effort over here, and then you also want to see that it's working. What I mean by that is that the highlighted green versus this dark green. Dark green is 12 came in. Let me move this up and slow it down so I can explain this to you. There we go. That's a good one. All right. All this effort here at 942 to 943, 54 contracts, 58 contracts, 57, all these started coming in. Let's see how price did not move. That's effort, but no movement. And that was at around 60, a price of 68.88. That was 940 something right in here, maybe. Maybe right somewhere in this candle, so somewhere over in here. We went down, down, down at 88 and did not move. And then all of a sudden, at 9:45, the sellers started. They kept the hammer on, and then they started moving the market. And from 86 to 85 to 83 to 82, they were taking all the other side, taking all the contracts. And when there was nothing left to go, you got to go down to the next price. So sellers see they're being aggressive here. They're moving the market. So they're taking this liquidity that was here and here, just like we thought they would. You might get a little reversal right here. Let's see if buyers come in. If buyers come in over here strong, we will take a buy. Take a long here. Let's see if these aggressors continue to move the market down. We certainly won't get in. It looks like they're not having very much. Let's just do it. We'll have to take some heat and may come down a little bit. We may just get out here. It looks like they're going to be successful in moving it. We're going to have to. I got in a little early. I thought maybe they would have some follow through here, but we're not. Put a stop in right here, just in case it gets crazy. Because if everybody gets out of the way of these guys, it can move fast. It's playing for reversal here, guys. Mean reversion back to VWAP. Let's see what happens. And this is a demo account, so I'm trading 5 contracts, and so it's $250 a point. So don't let this big number freak you out. It's just is what it is. Every contract is 50 points per point over here, or $50 per point over here. So here we go. Buyers are coming in. There we go. There we go. Should have took that $300 something. Give me one more time. Come on up. There we go. I'll take that. All right. 437. We got some slippage there. I'll take that slippage to my advantage. Okay. We got one trade in. We made $422 there. Very nice. So that's how you do it, man. It's not hard. It's not rocket science. We had a little pressure. We had a little drawdown, but we knew. What did we know going in? We knew from the past, buyers were in control. Every time sellers moved the market down, buyers took back over, and that's exactly what happened here. And we just took advantage of it. We just did a scout. We don't want to be in there and let them run over us or anything. We want to get in. We made $437 right there. We only had a 2.25 points. That's all we did. That's all we did, guys. It's not rocket science. You work these distributions, you work these ledges, you work these points of control. If I had not been sitting here on 5 contracts, I may have put a stop in here and let it go back to the point of control. If we were just sitting on a 1 contract, order or 2 contracts. I may have done that, but I like to get in fast, get out fast, and make the money. So there you go. We're pushing back down now. Could hit them again for the same thing here, but we're gonna see. Buyers or sellers sometimes gain enough momentum that they've taken out buyer stop orders here. The buyers that got in here probably had stops down here somewhere. Well, we've taken those out. So that will help with the momentum because the other side of buying is selling, and that's what this was right here. This was a stop run. We're just going to see if the buyers did that. If the buyers made that stop run, grab that liquidity, it should let the market move right back on up. So we'll see what happens. Can't really see me there, can you? Sorry about that. Apologize for not putting a video in the last week or so, but I have been in the hospital. Had a little problem with my heart, and they had to put a pacemaker in my old ass. But yeah, I'm feeling good. Everything is better. Sore. Yeah, that's what they're doing now that you can see. Buyers are coming in. Now they're not successful. The buyers were got absorbed right there. We had 355 contracts out of that little move right there. Got absorbed. Price didn't go up. It finally went up here after almost 2,000 orders came in. So that's a big buyer. Big buyer at 68.82. He just shot out and bought almost 2,000 contracts right there. So very good sign that he's not going to let things go. Let's get on his side. We'll take another little trade here. I don't think he's going to let the market come down too far. We'll go down below these passive. We'll stop. But he's not going to let anybody take him out. He's too big. Probably a hedge fund or somebody like that. Man, we're taking a little heat here. We'll see if these sellers are strong. People could be joining in. They saw maybe the stops get taken and the shorts had a little bit of leeway. Yeah, they're going to take me out here, I think. That's okay. That's okay. We'll take it and we'll see. Got a little heat there, didn't we? Down past. Oh, they got me. I was trying to get down past these sellers. I mean these buyers right here. Let me go back in. We just lost 1,000, so it's okay. Or a little bit more than that. We lost looks like about 1,400. That's okay. We're demo. We're learning. It's a demo account. Teaching opportunity. Should have got out quicker, but here we go. He let it come down a little bit, but he ain't gonna let it come down too much. There's our money back. We should probably take that and just at least get to break even here. Let me push up to this point. There's a lot of volume bought right there and right there. You can see it. We got some sellers sitting here. So we take this $700-800 rotation and then let it come back and hit it again, and at least will be some money in the bank. Always put a stop. I'm sitting there without a stop. That's stupid. Always put a stop. If you don't, you can get destroyed if all of a sudden everything is bought up, nothing here available, and then the market just goes and goes and goes. It can go really fast. So always use a stop. Okay. See, if these sellers aren't successful, then it's going to be a good trade, especially when we get back up into here. It's going to take off, I think. Anyway, we're in a good spot on the distribution. We're in at a good level here. Normal rotation on a lower time frame. It's to be expected. What's my video here going? Let's see. Don't want to drag this out for you guys. I'm just trying to. It's a good teaching opportunity. And I wanted to put something back out here for you. It's been been a minute. In the hospital all week last week, so still healing up. You know, what if he'll come in and buy some more here? He's got a better price. You would think he would add to that. Got that at 82. He's 4 points lower than that. You know, he would buy that and average his price to 80. But anyway, it's 1,000. Let's take it. That will make up our difference. Now we're 100 and a quarter up. Yeah, we had that one bad trade. We lost 13.75 on that one. So it happens, guys. Yeah, it happens. But what you got to do is just, put more on the train and get off. That's the name of the game. And that's how you trade. That's how you make profit. You don't get crazy. You got to know where your limitations are. We certainly wouldn't be doing this with a live account with 5 contracts or anything like that. I'm just trying to show you with the leverage that futures will give you with 5 contracts. Every point is $250. So buyers are stepping back in over here. Here we go. You see the changing delta. If we can get up into here, it should move on up. We're back at these guys are at VWAP here. We'll see what happens. We come down to about right here. I want to front run these guys. All right, see this? Well, this here's our order right here. We got nice little order sitting here. It's that line right there. Remember, these are passive orders. That's what this red and green is over here on our distribution. If we're going to get down there. See if the rotation brings us down here. If it does, it may come down to try to take this liquidity. Get a little bit of liquidity building down here. I don't put a lot of stock into these guys there because, they spoof. You're not supposed to do that. It's illegal, but they do it. They put these big orders in to make the algorithm go down there and get it. But right before it gets there, they'll pull their orders. They'll just hit cancel and cancel it. See, they did it. It's gone. So it doesn't mean squat. It can help you. It's a tool. What I like about it is I can get a distribution at exact prices over here, and I can see the market. It came down to here, and then there was nobody willing to sell anymore, so I had to go back up. Did not go below 68.70, which is indicated. I don't have it on. Normally I'll have on my low and high. You can go here. No, I'm sorry. You can go here and put your price levels in, and you can put high and low. You can show all of them open. There's your 68.68. That's our low. We came down a little lower. You can't see it, but there was some there it is. Right there. Action came all the way down to here, and then nothing below it and went back up. So here we are. All I've done is put my high and low and my medium price levels in here. And well, you know, what's that medium at? That medium's right at VWAP, isn't it? That make you think? Well, it should make you think. Um, VWAP's excuse me, this middle price. If we're going down, um, sellers aren't going to let it get past that, because that's a valuable value added price right there in the middle of the distribution. Certainly don't want buyers to take back over and people to join in for a buying frenzy. So they get halfway up in distribution here and see if they come back down. Like sellers might be trying to take this market. Yeah, we're in this little consolidation here. Have been since last night, after the market closed yesterday over here. We got into a consolidation a little bit above it. We've got a lot of volume down here, so we're probably going to go back down there. Looks like. Let's mark those levels. That's a good thing to do. This is yesterday's level. Just do a horizontal line at 9:30. Where are we? Down. Oh, just don't do that. I'm sorry. Horizontal line. I'm going to do a volume profile from 9:30 when the market opened yesterday to 4 p.m. right here. There we go. That was yesterday's profile. Today we're up here. This is yesterday. So yesterday we traded down in this distribution in the morning. We got above it. There was no interest. Price went up. There was interest in taking the other side over here. So there was some selling went on over here. A lot of volume here. Good levels to watch. This edge, where's this coinciding with our low? Overnight low was right here. That was the edge of this distribution. We call it a ledge. So I'm saying we're going to come down. This top ledge is this bottom ledge this morning. So buyers are truly in control. We should get to this level and see a buy up again. So let's get in on that action. We'll try it. It's worth a shot. Right now, price is here, 68.80. You can go in here and mark these lower value area and upper value area. Or I think you can extend these. Let's go here. No, it must be on trading view. You can extend those, but you can go in, you can go in here and just draw a line right here to coincide. You do it by hitting horizontal line. It's right here. Draw this out to here. Do another one here for the top of it. Right here. These are confluence areas. You can see how we respected it here. Came back to it right here. Respected it right here. And built this distribution. So buyers don't really want to let the market go below this volume right here. So the best place in that volume area to buy is right there. That's your lowest price. Let's see if we get filled. Video's going 35 minutes now, guys. So I'm going to shut it off now, and I'll come back when we have something. All right, guys. I just got a little antsy. I don't think it's going to come back down here. We respected this value area high from the previous day a couple of times now. So it came down to it here, and I got in just with a market order. We'll take that order off. Put a stop right below it. If it comes below that, then I'm wrong. I want to be wrong quickly. If I am wrong, and get out. So move my head out of the way. Don't have much room for taking heat. I'm only a 1.5. Let me get down here a little bit. I want to be watching what happens too with the transactions coming. I want to see some buyers come through over here. I could just take that. Let's just take that little $625 because we'll get come back down again. All right, so now we're up $812. So there you go. I think move this up. There we go. There's my 60-70% win rate as always. Not a bad win rate. And I took a bigger loss there than I needed to, but it was a demo account. And kind of wanted to show you guys what could happen and all of that. You certainly wouldn't take a loss like that with a prop account. You have consistency rules. They don't want you to really go below like $750 loss. So that's 30% of 2,500 is a 30% consistency rule. You don't really want to take or lose more than 30% on a prop account at one time because they don't like that. They like consistency. They like for you to build your profit up steady, slow and steady. They don't like big chances. They don't like anybody gambling out here. So, all right, 4 trades today, 3 in profit, 1, even though it was huge, lost, but we still made $750, paid $62 fee. We made 2,100, lost 13, so that's the difference there. There's our trades, our 4 trades. We made 437, lost 1375, made 1,062, and made 687. And you can see the longest trade was 3 minutes, 9 seconds. Shortest trades were just over a minute, or most of our trades just over a minute. I don't even like to take them that long. I like to try to catch the rotation at the bottom, watching the time and sales and watching the DOM over here and watching how it moves up and down. These candles, when I talk about rotation, I should explain that. Rotation on this 30-minute period was from here to here. Rotation on this candle was from here to here. That's what I mean by rotation. I like to try to see the size of my candles. They market opened here, so this, of course, is going to be bigger. This one will probably, it's a 10 o'clock candle, 10 to 10:30. This one may even grow to the size of this one. So it'll either go up in here somewhere or, down here somewhere. We'll see who has control. But hey, I got in, got my money, got out, and it's 10 o'clock. I go about my day now. We're done. And you can see if we had 3 contracts, that'd be a pretty good profit. 5 contracts and whatever, we'd have a great profit there. All right. Any questions, guys? Please let me know in the comments. I'll be glad to answer each one individually. yeah, that's how you do it. So we'll do this time and time again, so you get used to what I'm doing, what I'm looking for, and yeah, and we'll save you some aggravation. All right, guys, like and subscribe. Have a great day. See ya.